Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at Facebook daily, weekly time frames. So a consolidation day, but bulls bought the dip. Nice long lower wick, and that's nice healthy consolidation at this point. We'll be keeping an eye out for a potential bull flag pattern of consolidation. We saw one back here. And on a bull flag, whenever you see long lower wicks, it's a great sign because it shows bulls buying the dip, and we'll get ready for continuation. So a little bit of pullback after 4 bullish days, certainly normal and expected, and that's healthy consolidation so far. Weekly time frame, very little upper wick, very strong candlestick. We've got earnings next week. We're on the verge of an all-time high. If it's a bullish reaction to earnings, we're going to hit a new all-time high. If it's a bearish reaction to earnings, we're looking down at 126.78 and the weekly middle Bollinger Band 124.05. So bulls still in full control. Short-term support on the daily, we're going to be looking at the low of today, 131.08, because clearly the bulls defended that level with a nice strong bounce and a long lower wick. So on the shorter term time frames, there was a nice trade opportunity here and tons of volatility to start the day. First trade we were looking at was bearish, and that's because Google was the leader. Between Google, Amazon, and Facebook, the correlation was all strong, and we watched Google dump after an initial new all-time high at the open, and Facebook was a bit of a laggard. So let's actually compare real quick, where Google right out of the gate, bull move and then a dump, and we look at Facebook, and Facebook had a bull move and then it held up the second candlestick. So right here we were noticing there was a little bit of a lag, and then Facebook quickly caught up, so there was a bear trade. The bull bounce, certainly nobody anticipated it to be that strong, but after it was that strong, another play we were looking at was a top fishing play, where we have our clear resistance at the high of the day, 132.95. The odds of the bulls being able to break the high of the day on a bounce like this without huge volume, again, look at the bear volume compared to the bull volume on the bounce. So the odds that the bulls could go straight up with very little consolidation and break the new high of the day is very unlikely. So a top fishing play is when you make a bearish entry and you set your stop loss if that resistance, the high of the day, were to break. And of course it didn't. We got a pretty decent pullback. The high of that move was 132.87, and we pulled all the way back to 132.11. So a 76-cent pullback. Obviously, you're not going to get the exact top and the bottom, but even if you made 40, 50 cents on a weekly put, that's going to give you some nice gains in a quick trade, less than an hour on that pullback. Then we formed another lower high. This is an ascending triangle pattern where we had a horizontal base of resistance, and that was at 132.80. And you can see the higher lows as we kept getting closer and closer, and then the bears took over right here. We broke that higher low pattern and then pulled back, and weakness into the end of the day. So on the weekly time frame for Facebook, or I should say the hourly time frame, it was that 20-period moving average because we had held that level multiple times, testing it 4 holds back here on, see, that was Tuesday, another couple holds on Wednesday, and then we lost it after hours with the reaction to Google earnings, regained it, then a lot of back and forth, but overall seeing a bit of weakness after that bounce attempt So Google, Amazon, and Facebook correlations to watch. And like I said in the first part of the day, there's correlations where you can find the leaders and the laggards and make trades based off of that. So Google was the clear leader, and then Amazon and Facebook both dumped following suit, and then they both had a strong bounce following as well, or they all three had a strong bounce. So if I'm trading any of those three names, I'm watching what the other names are doing. And you can see that across the board with a lot of sectors. If you're trading the micro technology sector, you got NVDA, MU, and AMD. And the biotech names have their own names to be watching. So correlations are extremely important when trading stocks. And that's why everybody has, multiple monitors. And if you're only trading on one monitor, you're doing yourself a disservice. I used to do that. And, it's $100 for a really nice big monitor. Absolutely worth the investment. Once I got one, I thought to myself, wow, I'm an idiot. I should have done this long ago. So having multiple monitors allowing you to look at all these correlations going on in the market is absolutely beneficial, and I would suggest it. So I appreciate you watching. We'll check back in on Facebook. Nice buying of the dip from the low, and the market SPY is still very strong. Check out that video as well. Have a great weekend.